Avinash, good morning. Brent up 25, almost 26%, and it's causing huge jitters across global markets.
Yeah, good morning, Ava. I think markets, obviously are in a very volatile zone. And I think crude going up to $110 a barrel is definitely bad news for India. I think a significant amount of crude is imported. So some sort of heavy selling pressure could be seen on all the oil sensitive stocks, typically oil marketing companies, paint companies, tire companies, lubricant companies. So I think you're going to see a little bit of volatility in the first half. My sense is that as geopolitical developments move ahead, I think the market should be now keeping this as a central focus to decide how the trend emerges. So I think most of the domestic themes like hotels, hospitality, or that way cement, these could be possibly pockets of safety, at least in the very near term. In fact, FMCG could also be looked upon, but definitely in this kind of market, investors need to be careful. They need not hurry and buy stocks. I think they need to clearly monitor the developments in the market and then take a decisive call.
Nash, if I can come to you on the kind of support levels that you're watching out for.
No, I think, Abba, 23,000 as a level where possibly markets could possibly look at. I think, now talking about levels, it all depends on how the geopolitical situation changes. Because today we'll be watching for, the FI flows. If there is a huge outflow in FIs, plus if the rupee gets weaker, then I think these are going to be negative trigger points. I think, at this point of time, my suggestion to investors is that just wait and watch for some time. Let the market settle down. We have just started. So I think, rather than making a hasty entry, it's better to wait for the markets to settle down for at least an hour. 23,000 will be a crucial level. If that breaks, then I think it's going to be further panic. Till that time, I think, markets could possibly have a sigh of relief, maybe in the second half, hopefully, if some positive news flows come in. But net, I think it's a market where I think you need to wait for some time before you start, deploying your funds in this kind of market.
Avinash, what's likely to be the strategy for expiry? Because it's tomorrow. I'm just getting a head start on how do you see traders positioning themselves?
No, I think this expiry is going to be horribly bad, Abba, because today post-market, if the market does not show strength, if we come closer to around 23 odd thousand or 23,200 odd levels, then I think tomorrow you're going to see a lot of volatility since it's expiry day, and you could possibly see a little bit of jerk in the second half tomorrow. So I think traders would like to square off their positions. In fact, today itself, because maybe tomorrow the volatility will be much higher, and we don't know what's really happening on the geopolitical front. In case there are some further attacks on Iran or Israel or US, I think that would further compound the matter. Crude oil prices at $110 are definitely not affordable to India. Any spike further is definitely going to be another negative surprise.
Absolutely, and the VIX is still up 20%. I mean, when is the last time you saw that? 20% and more on the VIX. It's looking incredibly risky right now. As Avinash said, hang in there, sit tight, watch what happens.